Hello, and welcome back to another episode of Chat with Brandy, where we talk business and personal finance, taxes, and how to make money doing what you love. Today is episode number 25, and I have a special guest here with me. Justine Cooper from ATB Financial is here with me to talk about credit today. So, hi, Justine.
Hi.
So, I wanted to, first of all, introduce you.
Yes.
And talk about the clients that you serve.
Sure. So my name is Justine Cooper. I work for ATB Financial. I work out of the Sherwood Park Garden branch. I have been there for about 6 years now, specializing in personal financing. So basically all things personal credit-wise. Just as of late, I've expanded that into looking after business clients too. So looking after entrepreneurs, small business owners, and helping them with their lending and advising them. So lots of exposure to all things credit.
In Alberta, really.
Yes. Yes.
So this episode today, we kind of wanted to make this really about new adults. So people who are either brand new, 18, or new to Canada. Okay, so if you have someone in your life that's really young, or you are really young, this will be a great video for you today. Or if you have questions about credit and how to keep it good, get it better, that kind of stuff. So Justine's your girl. So let's get right into it. So first of all, what is credit and why is it important?
Yes. So credit. Credit is basically, generally speaking, it is a tool that lenders will use to assess how clients have both managed and honored their financial commitments, basically, both currently and in the past. So I always say the biggest indication of future behavior is what?
Past behavior?
Past behavior, right? So, and of course there's exceptions to this, but typically, you know, if someone has poorly managed their finances in the past, oftentimes they will poorly manage it in the future. So credit is basically a tool we can use to assess the risk of lending money to certain individuals. And everyone has credit. Everyone has credit, and it will just depend on how people have managed that over the years. How that will look to a lender.
So why should I care about my credit score?
So, I mean, I always have people saying, you know what, I don't need to worry about my credit score because I don't really foresee the need to borrow money. And what I would say to that person is, you know, that's super great that they feel like they are in a financially stable situation. That's fantastic. What is better than that? But financial situations can change, and they can change really fast. And to need credit and to not be able to get credit in that situation is a scary, scary place to be. So basically, credit is important because it is a huge way we decide whether or not we can lend to certain customers. So things like mortgages, lines of credit for both business and personal, right? So it's everything.
Well, car loans,
overdrafts. It even helps us at the bank look at things like what interest rate will we give you, what release limits will we set you up on your bank account. So we look at it for all those kinds of things.
And even if for some reason you never ever had to take a loan, and let's say you bought your house outright and all that stuff, even getting like insurance and things nowadays, or getting a cell phone plan, like your credit matters for that stuff.
So it absolutely does.
Okay, so what advice would you have? So we were kind of talking before we started airing here, and I asked her if somebody is brand new adult, so they just turned 18, and she pulled a credit bureau, I said, would their score be 0? And she said, yes. So you basically start from absolutely nothing. So what advice do you have for those people? So either brand new 18 or brand new to Canada, they have a 0 credit score.
Yes. So great question. So yes, when someone is a new adult, so they've freshly turned 18, we look at them like newborn babies because they have never had credit reporting in their own name. We really have nothing to go off of to base our decision. So what I would recommend to those people is get in and try and get a small credit product in your name. And banks will do this. I know ATB, for someone who is newly 18, we automatically approve them for a $500 MasterCard. So it allows them to have something where they can start to build, right?
And $500 isn't like such a crazy amount that they can get into trouble
exactly.
with that. Yeah.
And we're so pro education too, because they're starting as those newborn babies.
Yeah.
Like we want them to develop those spending and those finance habits that are good from the get-go.
Love that.
Right?
Love it.
Then for people who are new to Canada, again, banks will look at them a little differently because we want to set them up for success. So for example, ATB, right off the hop, if someone has immigrated to Canada from another country, we do things like auto approval at $2,500 for a MasterCard.
Okay.
We even do a preferred rate line of credit so that they can get established and get on their feet. And we even offer vehicle loans
awesome.
with no credit history. So yeah, get some education on how to manage your credit, and then we recommend get at least two products generating on that credit bureau, and that's going to help establish a really good history for.
So two products would be like, okay, so we're talking that $500 MasterCard, and then like what about like a cell phone bill contract?
Perfect.
Okay.
Yeah, totally perfect.
So it doesn't necessarily have to be a giant credit card or something that scares you. It can be, but okay. So they get these two products, and then what's important next?
Yes. So the important part is to not screw it up. You're a brand new baby, so you want to use it responsibly. That's what lenders are looking for. So they're basically looking to see that you've managed that well, and you haven't gone crazy with it. For any piece of revolving credit, for example, we would want to see, definitely no lates, definitely no missed payments. Yeah. And for anything, so again, revolving credit, like a credit card or a line of credit, something that you can use and then pay down and then use again. We want to see if there's a balance carrying over month to month. We don't want to see that more than 50% of the approved limit.
Okay, that's really important that I think a lot of people don't understand.
It is the biggest thing that I tell people, that people say, wow, I never knew that, or no one ever told me that. So it's the biggest usually surprise for people.
Yeah. So because I feel like a lot of times if you got that $500 MasterCard, you rack it up and you pay the minimum payments, and you're going, I'm doing good because I'm paying the minimum payments. Well, first of all, you're paying interest the whole time. Secondly, you're above that 50% limit. Yes. So it's not actually doing the biggest favors for your credit.
No, it could, when you're carrying a limit that is over that magical 50% mark, you're hurting yourself.
You're hurting your credit.
At that point, you are hindering your creddet. And the things that you do now with your credit, the sad thing is that's still going to be on your credit report in 7 years.
7 years.
So that's another reason it's so important to start on the right foot.
Oh, because your life can be completely different between age 25 and 18. 100%. So it's starting out on that responsible path and teaching yourself those good habits.
Yeah, making those habits right off the hop, because then you'll just keep those habits hopefully and set yourself up for a really strong financial picture.
And it can be like for credit building, from the credit building perspective, it can be a really good idea to set your bank account on auto pay to pay off your credit card every month.
Love auto pay.
And then you're never going to miss it. Same with like bell bills and things like that, utilities. Obviously the only way that they allow you to build credit is if you're paying your bills on time. Yes. So again, auto pay can be your best friend there. If not auto pay, then set reminders on your phone. Technology is our friend now. So none of us carry around those little checkbooks anymore, and it makes life so much easier. Okay, so kind of similar question to what I just asked, but let's talk about people who aren't zero, but have established credit, but maybe it's not great established credit.
Yes, so very different. So for these people, there's a few things that you can do to rebuild your credit, and it's usually very frustrating because credit is one of those things that's very easy to damage very quickly, and it takes a long time to rebuild. So again, another reason why it's important to start off on the right foot with it. But a few things. So definitely when someone discovers that they may have, poor credit or damaged credit, the biggest thing I would advise them is, okay, so going forward, definitely don't miss any more payments.
Right.
We as lenders can see every single missed payment again for the last 6 or 7 years. Also, no missed payments. So if there's any missed payments, bring those up to date.
Okay.
Things like overdrawn accounts are
Okay.
really, really bad as well. So if there is any overdrawn accounts, so for example, if someone has a $5,000 MasterCard limit and their balance is even 5,100,
Yes.
bring that within line and start to work on bringing that limit down within that 50% threshold. Collections, if there's collections on there, settle those, pay them out, because that's going to show as unsettled.
Right.
And we need to see that paid. As soon as that is reflecting as paid,
Yes.
usually I see credit scores jump like
Okay.
like humongous.
Okay.
So
Good to know. Yeah.
that's huge. I know it's lots of people kind of put the blinders on and they just want to ignore those and
Yes.
move forward and kind of just be done with it. But it is so important to go back and pay anything that is still outstanding. And then, yeah, again, just watching those revolving balances. So if there's a few lines of credit where the balances are sneaking up, try and work on bringing those down. Even credit cards too, try and work on bringing that down, because what you said, a great point too, is if you're carrying a big balance on a MasterCard, that minimum payment, that's going towards interest.
It's all interest. Yeah.
Yep. So you're kind of on that never plan, that
Yes.
hamster wheel, right?
Yeah.
So those are a few things that I would
So
recommend.
priorities wise, let's say I have a bill in collections and I have a MasterCard that's over limit.
Yep.
Okay. And one of them can get paid this month.
Yep.
That's it. Which one am I prioritizing?
Collections.
Okay.
Yeah.
Okay.
Hammer the collections.
Okay.
Most lenders, well, I shouldn't say most, but many lenders won't even be able to move forward with things like applications unless we see proof that those are paid.
So when you say paid,
Yep.
oftentimes once a debt has made its way to collections,
Yes.
you can actually settle a debt.
Yes, you can.
So what is that, does that have a bearing on credit?
It can kind of depend on what the debt was for, but typically if we can see either that the collection was either settled or paid, and
Okay.
that's reflecting
There's
on
no
the credit
balance,
bureau.
kind of, yeah.
Yeah, and if the client can have a receipt of that payment, or
Perfect.
even a letter stating that there's no further liability,
Yes.
that's something that we would be able to work with.
I'm just going to kind of interject and just say, first of all, when I said settled, I mean, a lot of times they'll let you pay cents on the dollar. So they'll go, okay, you owe $1,000, we'll let you pay $800, call it even. 100%. Never ever make that payment without a letter from them in
Yes.
writing
So
stating that that's
important.
okay. Okay?
Yes.
That's collection agencies can be tricky.
They can be.
So you want to cover yourself not only for credit building purposes, but just so that they can never come after you again for
Yes.
that balance, okay?
Yeah.
But that's really good
yeah,
information.
no, that's a great point.
Is there such thing as good or bad debt?
You know what? No, I would say it's more, we're really looking at not really what kind of debt there is, but how it's been managed.
Okay.
Right?
Okay.
So, have those monthly obligations been met? Has there been delinquency? We really wouldn't look at anything that's good or bad. The one thing I might note here is lots of people don't realize, and not that this would be a bad debt, but if someone has co-signed for someone,
Okay.
that can often show up on, depending how it was written, on that co-signer's bureau.
Yes.
So something to be mindful of.
Yes.
Because banks often will look at that debt as something that you are equally responsible for, even if you never see the statement, never make the payment, don't even really.
Scary.
Yeah.
Yeah.
So that's kind of something I would note, but not really good or bad debts, just basically how those debts are managed.
Okay.
Yep.
So, like, to you, it wouldn't really matter if I have a mortgage for, let's say, $100,000 that has a house attached to it, obviously, versus 6 credit cards with $100,000 on them.
I mean, at that point, I would advise you to structure it a little differently. But, I mean, and I hope no bank would put you in a situation like that. But, I mean, again, if things are in good standing, we're pretty happy. I guess a bad debt, if we were to look at it, like the cash money loans.
No, those are terrible.
Never a good,
Never.
never a good thing.
Always bad.
So that might be like a little bit of a red flag for sure that that we would want
It's just,
to
again,
address.
it's just kind of showing there might be a history of poor money management skills, right?
Yeah, exactly.
I wanted to also kind of, while we're talking about sort of low credit, like, first of all, what do you consider a low credit score?
Yeah, great question. So people always ask this. They say, like, what is my credit score, and is that good or bad? So what I usually tell people is, I can speak for ATB. ATB's minimum credit score that they will kind of entertain is around 630.
Okay.
Now, of course, there's exceptions to that because some people have situations that were just out of their control, and
Sure.
yeah, that's kind of like a soft guideline, but generally around the 630 is the minimum we will kind of work with. Usually I tell people if you're in between 7 to 800, that's a really good place to be. Good,
Okay.
strong place to be. Anything over an 800 credit score is fantastic.
Of course, yeah.
And we're really happy
How
with
rare
that.
is that?
Depends. It's usually associated with age. So someone
Okay.
who is established with
Okay.
a mortgage and they've been paying bills for years,
Yeah.
and they have lots of good credit history showing on their credit report, they're gonna often have like a stronger score.
And again, it's looking 7 years back, correct?
It is,
Okay.
yeah.
Yes.
Yeah.
Okay. So obviously someone who's 18, 19, even, 2021, even though you've been making the right decisions and that kind of thing, your credit score still isn't going to be as good as when it is when you're 25.
Totally.
Correct?
Yeah,
Yeah.
absolutely.
Okay. So can we talk a little bit about bankruptcy versus consumer proposals and how those affect your credit score or your credit bureau in history?
Yes. So it's tough. Any of those situations are a little tough to work with. That being said, ATB is really good at kind of looking at the full picture. I always call myself the queen of exceptions because
Okay.
there's just so much gray area, and everyone's situation is different. And sometimes even if someone has gone through something like that, they're still deserving of finance, and they're not necessarily going to put a bank at
right?
once they're discharged.
Yes.
They're not
Okay.
necessarily going to put a bank at risk, right? So that's kind of what we're looking at. The rule of thumb is usually 2 years from any of those things.
Okay. Okay.
Discharged.
From the date. Yes. Okay.
Yeah. So, consumer proposal or orderly payment of debt, those we look at definitely a little bit more positively than full bankruptcy because it's showing that the customer has met some sort of an obligation. It probably wasn't the full obligation in some cases, but they have kind of met some of their obligations for those debts, right?
Yeah. That's definitely not only true, but there'll be more information on this in an upcoming video as well, just kind of getting into the nitty gritty of bankruptcy versus consumer proposal and the differences between them. But for right now, the consumer proposal, is a less of a hit on your credit.
Yeah, absolutely.
Okay.
Yes.
So I kind of want to take this opportunity to talk about credit scores versus a credit bureau.
Yeah.
And because she was talking about credit scores between 700 and 800 and that kind of thing. But what you need to understand is if you pull your own credit score on the internet, okay, one of the many availabilities. So I'm not talking credit bureau, I'm talking just your score. That may be completely different to what Justine sees than what I see. And the reason why is because different banks and different lenders are looking at a different algorithm, if you will. So ATB might focus more heavily on the 50% rule versus late payments than another bank would, right? So it could slightly differ. So just because you see, like if you see your credit score and it's just used as an indicator, that's great, but don't take it as 100%. That's my credit score at every single institution for sure. But can you tell us a little bit about a credit bureau?
Yes, so a credit bureau is basically the full report.
Okay.
So when I look at a credit report, I will see the credit score right at the top, and then I will see a full report. On that report, we'll list all of the credit products that customer has in place.
Yes.
And then again, what the balance is, what the limit is, if there's any late payments, when that credit product became available to them, and all those kinds of details. So that's why I always say, that minimum 630 that we usually look at for lending, the credit score is one thing, but the full credit report is really what we're looking at there. I've seen credit scores that are very low, but their credit report isn't necessarily that bad.
It could be like just a lack of
It could have been,
experience kind of thing.
maybe 1 or 2 things a couple years ago.
Okay.
And so in that case, of course, we would look at moving forward.
Okay.
Right? So
Yeah.
does that answer?
Yes.
Yeah.
And when it comes to pulling your own credit score versus bureau,
Yes.
I would say your credit score doesn't really matter to you personally. It's your credit bureau. When you're looking for purposes of identity, like you're trying to make sure no one's stolen your identity and pulled out credit in your name, that's when you're looking at a credit bureau, because that's going to show you, again, like she said, every product. So if there is a product on there, you're like, I don't recognize that whatsoever, that is when you'd be able to start investigating. Looking at just the credit score, not helpful at all for you.
True. And even with things like former bankruptcies, that's all going to show on a credit report, where that wouldn't necessarily show on a credit score.
Correct. You would just see a low credit score and have no idea why.
Exactly.
Yes.
Yeah.
Okay.
Yes.
So just a couple bonus questions.
Yeah.
So do you have any books, podcasts, or courses that you would recommend on this subject matter?
Yeah, so I was saying to Brandy earlier today, but the internet can be a very evil place.
Yeah.
Don't go on the internet. No, I'm just kidding. Stay on the internet.
Well,
Watch
for
our
this
live.
video, yeah.
Watch our live. But there is so much misleading information out there. Very true with things, all things credit.
Yes.
So I always say get in and talk to a professional.
Yeah.
Talk to someone who does it for a living and get advised on your specific situation and your specific credit history, because there's people, that's their job. Like, hi, that's my job,
Yeah.
right? Also, too, ATB has so many resources for this kind of thing. We were talking earlier as well about the Entrepreneurship Center.
For all you small business owners out there, great free resource. ATB in general, I think in terms of like all the banks that we have available to us here in Alberta, are definitely the most education focused, I would say. Yeah. They offer things for free that places charge good money for. So if you have time, I'll stick the links in too for the Entrepreneur Center, but they offer courses, they offer networking events. It's awesome.
It's worth checking out for sure.
Yeah.
Yeah.
Absolutely.
Yeah.
Where can we find you online? So obviously, Justine is through ATB, the Sherwood Park branch, and I will leave your her digits and stuff in the comments. But as far as finding ATB online, you said there was a group.
Yeah, so I mean, of course, ATB we're on Facebook, we're on Instagram. There's always tons of good information there, and community events, networking events, info and all the promotions and campaigns that we have going on. We also, out of Sherwood Park, have a specific Facebook page that we have just tailored more to the local community, so local events, which is just a little bit of a smaller, like I said, more tailored group. It's called ATB Financial Sherwood Park Community, and I think
I'll throw that link in for sure.
So I can be found there as well. Always a really good way, even if there's quick questions or you're wanting to get a conversation started, email is such a great way. And you can put my email down.
And Justine will accept text too. Like I text Justine, and she's highly accessible, which is lovely in a banker for sure. And like she said at the beginning of the video, she not only does a lot of personal finance, a lot of personal banking, credit cards, that kind of thing, but she's also able to service your business needs as well. So for those of you that are business owners, as a bookkeeper, I personally love ATB. I think that they offer some of the best rates for business accounts, and they integrate so nicely with QuickBooks Online, so nobody can complain about that. So that pretty much wraps it up today. So I hope you guys enjoyed it and found something useful and entertaining about this video, and we will see you next week.
Thanks.